Okay, so just very quickly, what is ETF? So when you actually buy a unit of ETF, you are buying a basket of underlying stocks. Okay, so let's say, for example, there's in Singapore context, very popular is STI ETF. You actually buy unit of STI ETF, you are basically buying the 30 stocks that constitute STI. Okay, that's what ETF is about. So this is just to reiterate, you can buy and sell just like stocks. So ETF, you can buy and sell just as stocks. So if let's say your platform can trade US stocks, it can trade ETF also. Okay, so it's not like, oh, I have to open a special account to buy ETF. No need. Okay, now, so very quickly, if you actually want to find more the ETF, you can actually use this thing called the ETF screener. So I just go through very quickly what are some of the indicators or factors I actually use to help me sieve out ETF. So later I'll do a live demonstration. So of course, like I mentioned earlier, I actually quite like the iFast platform in terms of analysis, in terms of analyzing the ETF. In iFast, they actually have a screener. You can actually help you to sieve out stocks ETF that you're looking for. And how do we differentiate the ETFs? Okay, so one of the main thing we look at is AUM, asset under management. Okay, do we prefer ETF with larger AUM or smaller AUM? Okay, larger. Okay, so larger AUM for few reasons. Number one is this: usually larger AUM is more what you call more efficient. That means the expense ratio is lower. Okay, you pay less fees. Because for example, to run a fund, there's some fixed fees. There's some fixed fees. So if the AUM is large, the percentage of fixed fees is actually low. So that's one reason. The second reason why we want to go for large AUM is what we call liquidity. Liquidity, which means if you want to buy, there's always people willing to sell to you. If you want to sell, there's always people willing to buy from you. So there can be cases whereby it's not liquid enough. If you actually want to sell, you cannot find buyers. Okay, you cannot find buyers. Then what you have to do, you have to keep lowering the price. Now, number two, you can actually see the past performance. Past performance. Okay, so this is SPY. SPY is S&P 500 ETF. So you can see. So the other thing that I'll pay attention to is the past years. What do you call it? The past years performance. This is per annum, including dividends already. Past year per annum. What do you call that? Returns including dividends. So if you were to buy S&P 500 10 years ago, your S&P would have went up by 10% every year. Sorry, 13.55% every year. So would have definitely doubled already if you actually buy S&P 500 10 years ago. Okay, so that's the other thing. I actually look at the performance. We have to click here. So later I'll just do actual demonstration. Okay, AUM, past performance. Okay, then the third thing I look at is the holdings. Okay, what are the main holdings of the ETF? So basically, like I said, if you buy ETF, you're buying a basket of stocks. So it's actually good to know eventually what are the underlying stocks that you are buying. So these are the three main things I look at for when I actually were to choose an ETF. Okay, let me just do a real life demo here. Okay, either type FSM1 or Bun Supermarts. You can click on ETF. Okay, ETF selected. Okay, so let's say, for example, I want to invest in the US market. I go for geography sector. I just choose US. Save changes. And yep, that's it. Then usually I go for the larger AUM. Yeah, so you may have to play around with the lever a bit. So I go for the larger AUM. So I click here, they allow me to sort. Okay, so you can see the SPY is actually the largest. So that's one, AUM. So number two is the performance. You can click here. You can see the past performance. So as mentioned just now, if you actually bought it 10 years ago, over the past 10 years, you would have actually got an average return of 13.55% per year. Okay. So number three, I will actually look at the holdings. I click on the ETF and scroll all the way down. So down here, this is where you can actually find the holdings. So if I buy into SPY ETF, these are basically the stocks that I'll be investing into. Why do we use ETF, especially during this period of time? So what, why you cannot just buy into stocks? Why use ETF? So number one, ETF is actually very good for RSP. If you actually want to automate your purchase, regular saving portfolio, you can use, like, for example, as you can see here, the FSM1, they actually provide RSP. So they will help you to automatically go and buy ETF, automatically go and buy ETF. Okay, but you can see that not all of the ETF have this option. Okay, so like this one have, SPY have, okay, so SP you can just buy. So once you actually set it up, they will just auto gyro money from you every month. Okay, then they buy the SPY for you. In this case, buy the ETF for you, then just automatic for you already. Okay. But please take note, depending on the size of your funds, it may be more efficient to use unit trust if you want to do RSP. Okay, what do you mean by more efficient? That means cheaper. If let's say, for example, if you want like every month buy $100, $200, maybe it's actually cheaper to use unit trust. Okay, so whereas for unit trust, once you go into RSP, they may not charge you a commission. They may not charge a trading fee. Okay, but they charge platform fee. Okay, if not, usually this is one reason why people use ETF for RSP purposes, regular saving portfolio. Okay, next is for thematic investment. Like for example, I want to invest in a certain theme. I don't know which stock to look at, or I want to play safe. I just want to buy the basket of stocks that all in that same theme, so that my risk is actually spread out. Okay, so like for example, instead of buying DBS, UOB, OCBC, I buy into all three. Okay, like for example, personally, this is what I've done. There's one period, I'm still not very familiar with crypto, but everybody talk about crypto. So it's like, okay, I think it's time for me to also start learning new things, but I don't know where to start. So you can actually choose, like, for example, a crypto ETF. So you can actually select here. I also tried this before, clean energy ETF. Okay, these are the few ETF I actually bought because I want to invest in certain theme, THEME. Okay, so again, let me just share with you how you can find this piece of information. I go back to the screener. Here. So you can just simply have specialized sector. Click here. Then you can choose. So let's say AV and EV. So these are all the ETF that use with AV and EV. Same thing. I will just sort them according to AUM. Then you see a list that came out. Okay, so down here, they will actually tell you where is this ETF traded. Like for example, this one is actually traded in, this one should be the Shanghai Exchange, or Shanghai or Shenzhen Exchange. It doesn't mean that always is traded in US Exchange. You can see this is traded in the Hong Kong Exchange. If you actually want to buy in US, then you have this one. Okay, Global X. So this is in US Exchange. Let's see. If you actually buy this, what are the companies you are investing in? Okay, not sure they show. Sometimes they actually don't exactly always show. This one they do. Okay. So if let's say, for example, you buy ETF, you're basically buying all the car company, NVIDIA. Oh yeah. Someone was saying, okay, NVIDIA is the main producer for the chip for autonomous vehicle. So probably that's why it's actually here. Okay. So you're being buying this basket of stocks. Okay. So another reason to buy ETF, thematic investment. So there's actually this thing called the inverse ETF. Okay, what the inverse ETF basically does is instead of buying, they're selling. Okay. So inverse ETF will make money when the stock market come down or the particular stocks that you buy, the price come down. So simple as that. Because instead of buying, they're selling. So that is also available. Okay, I just want to share some personal experience. So this part is quite high risk. It's quite high risk. Like I said, every year I will do something different. It's more for my own learning. Okay, please don't see me as, how come I break away from my long-term investing? No, no. Okay, to me, it's very clear. Hopefully, I have repeated enough. 70% of all my funds is still in REITs, income stock, give me steady dividends. Okay, that has not changed. That will never change because my objective is always to build what you call income portfolio. Okay, I have a very small portion of fund. It's more for learning one. For learning, even like maybe 5%, 10% for me to learn. Investing is what I call that. Stock market is always got new things. So I cannot just, just do everything year in, year out. So I actually use some money to actually learn. So one thing I'm actually doing this year is quite interesting. I am playing down market. Like, for example, earlier, I actually mentioned that I believe that the market will come down. So instead of do nothing and wait, so I've actually been using ETF to see whether I can make a little bit of money out of it. So one way is you just simply short. Okay, short the ETF. So apparently, my platform allow me to do so. I think all you need to do is to have a margin account. My platform is a margin account. So they actually allow me to short. So I could just simply sell, like for example, sell SPY ETF. And if of course the market really go down, then I make money. Also simple as that. Okay. So my point is this. Since I believe that the market will come down, why don't I take a bet? This one is really taking a bet. I won't even say it's investing, really taking a bet. Okay, again, like I said, very small portion of fund. I'm really taking a bet. Since I think it's come down, why don't I even try to make some money from my own opinion? So I actually sold SPY ETF. So not advisable for all. Is like I said, just want to do some sharing on the actual investment strategy that I actually do for myself. Of course, if you actually want to do this, really, if you want to do this, have to know it's very high risk. You remember to do stop loss. So in your platform, they allow you to do stop loss, whereby you can also key in at the same time. So let's say, for example, instead of go down, it went up. So after what price, it will immediately cut loss for you. Remember, if you actually want to do all this high risk investing, please remember to do all these risk mitigating measures. Okay, of course, the other thing that we can do is if you expect market to go down is to buy put. So I could also buy put on ETF. So if let's say, for example, now the price is 518, I think the market will go down, let's say within 1 week. If I think that within 1 week, the market will go down, I can do this. If I chose this, I have to pay $69. I have to pay $69. And the strike price is 514. If indeed within the next 1 week, the price go down below 514, then I make the money. If the price remain above 514, then I lose $69. Also, that is another way for me to use ETF with options. I actually buy a put option. Or as per what one of the members said, if you think that the market can go down, you can use an inverse ETF. So basically, you just buy an inverse ETF, and the ETF already short the product for you already. Did not sell, you buy. Okay, hopefully it's not confusing. What I do is I look at AUM. I will look at the performance and the underlying counters. So personally, I realized that the AUM is actually very small. Okay, so for this particular one, I believe the AUM is quite small. Okay, fun fact sheet, fun fact sheet. I can download. Yeah, so the AUM is only 6 billion, very small. This is very small. Then the next thing I'll look at is the past performance. You can see, you'll be losing money. So personally, I think this is probably a trading instrument, very short-term trading. If you really want, it's probably like buy today, sell tomorrow, buy today, sell tomorrow type. Okay, unlikely to be long-term. If you hold it for long-term, as you can see here, you have lost quite a bit of money. This is per annum, by the way. If you have actually held this for long-term. Okay, inverse ETF is available, but I see this more like a trading instrument. Okay, so whoever that suggests this counter, I hope I've answered your question. I think Alex, is it? Alex not sure in the house. I hope I answered your question. This is how I look at it. Okay, AUM, performance, and of course, underlying counter. In this case, unless you have a very specific trading objective, like hedge over very short term, if this is definitely not something you should hold for long term. This is what the historical performance says. Okay, again, just to highlight the fact that, when I actually try thematic, which I think market go down, okay, it's super high risk, not for long term. Okay, there's actually some statistics to actually show that most of the time the market go up rather than come down. So there's actually someone actually doing some survey, calculate like the number of days the market go up, nowadays the market come down. So you can see here, we use the most recent one. The up days are 54% and down is only 45%. So for those who are really thinking of do what I do, number one, please take note, it's high risk. Okay, it's high risk. Really just use funds that you can afford to lose. To me, I call them study fund. Learning fund. Use funds that can afford to lose. And you have to know the stats is actually not in your favor. Definitely not for long term. Definitely not for long term. Okay. So I have actually finished ETF. So hopefully I introduce you to ETF. Okay, apologize. I introduce you to what ETF is, then how to find out more about ETF. Basically to analyze ETF, AUM, past performance, and underlying stocks, and why we use it. Why we use it. So number one is for RSP purposes, regular saving portfolio or regular saving plan. Or number two, you want to invest in certain team, THME. Okay, as I mentioned, personally, I've invested in a crypto team. I invest in a clean energy team, and currently I'm investing ETF for the team of market going downwards, but super high risk. Oh, the difference between synthetic and physical ETF. Okay, thank you so much. So in a physical ETF, what they do is, if you, like for example, I use STI as a case. If you actually buy into a physical ETF, you give them the money, they really go and buy into that 30 underlying stocks. So that's what they call a physical ETF. Okay, that means they go and buy the stocks. There's actually this thing called synthetic ETF. Is if you give them money, they actually go and buy into derivative instrument. Okay, like for example, swaps and things like that. That mirrors the performance of that underlying stocks. Okay, basically they don't go and buy into the exact stocks. They will actually use instruments to mirror the performance of the stocks. So long story short, synthetic ETF is actually more risky because you have more risks like counterparty risks.